It's time for some overlooked stocks, the movers that you missed in today's session. George Tsilis joins me from Salt Lake for Pool Corp first. George, this one's pretty straightforward. It sounds exactly like the ticker. They make pools. I want to be very clear about that, George. Swimming pools.
There's no doubt. It's very clear. Pool Incorporated, OJ, is the largest distributor of pool and pool-related products. We know that the COVID-19 has created a lot of problems, especially in the commercial area of the pool industry, hotels, public recreation centers, and so forth. But there's been huge consumer demand out the household level. Yeah, and the other thing is there's this whole de-urbanization trend that's going on. The demand for pools at the house are huge right now. So it's not just the actual pools themselves. They actually have private label and, of course, third-party brands that they supply. And it's all the maintenance equipment, chemicals, even kiddie pools. If you want to buy one in a box, set it up for your house, you can do that through of course, their company. But overall, their company is doing extremely well in this environment, and it just continues. If you look at the numbers that were reported for the company recently, they beat the expectations about $1.06 billion in sales. Estimates were about $825 million. And this is coming off a quarter where we were basically frozen over in the winter, and there's still huge demand and backlog for their products. And I think there's going to be huge demand going forward because of reopening of a lot of hotels and casinos, huge social attractions are the pools. Not to mention places like SeaWorld, OJ, just to name a few places where we have a lot of these major commercial pool operations.
Well, you can't swim in the pools in SeaWorld. They got fishes in them, right?
Well, the fish swim in it.
Okay.
Yes.
All right, so there's a little housing demand to offset the travel demand. Georgia, how come it took this long for the market to figure this out? I mean, the housing trend has been red hot. Pool just broke out the highest since November, but I mean, for a while there, it was just going sideways.
Yeah, I don't know if you can pull up a 3-year price chart, but the stock itself has done extremely well absent COVID. It's done better through COVID. There's some other reasons why. One is it's the largest national dealer, and so what that means is it has scalability. I mean, they service about 120,000 different customers, and over the years, in and of itself, the company has grown organically somewhere between the 5 and 8% range, but inorganically, the company has made a series of acquisitions. In fact, quietly, they've actually made 4 acquisitions in 2020. A lot of people may not recognize that. So, look, if you look at the revenue numbers, you have to kind of look at organic versus inorganic growth. I didn't actually look at the differences because they weren't reported. I didn't go through the conference calls because I didn't have time. But the total sales growth was 53%. And again, that's quite a bit above its organic growth numbers. But inorganically, what's going on is they're generating plenty of profitability metrics because of the fact that they're gaining scale. And they're basically doing so through higher volumes, acquisitions, pricing power, and of course, direct to commercial and of course, direct to consumer operations that they have as well. So financially, it's very fit. And so that also brings light to the exogenous demand that the company is also generating benefits from. And that's again from more people buying houses, people want recreation at the house. So why not include a pool alongside of that?
Okay. All right. I'm having fun with this one, George, because a lot of times you bring us these really obscure, hard to figure out businesses for overlooked stocks. But this one I got my head around, man. They make pools. Okay, George, let's go over to another one.
Straightforward.
All right. Qualtrics XM. This is kind of an interesting stock that does somewhat of like a consulting style firm. I mean, what exactly from the digital side do they do, George? Because it sounds like, from what I read, they're spinning a lot of the digital connection.
Okay, so this is one of the obscure companies. So what I ended up defining Qualtrics, or symbol XM, as is basically an experience management software category company. It's basically a data analytics firm. They really collect and organize and provide feedback for customer-related data. So they integrate 4 segments, which is customer data, employee data, brand data, and products data. And it's more of a feedback mechanism analytics company. So they try to assess customer experience, which is huge when it comes down to driving, spend for marketing, advertising, and so forth. but also for things like quality control and improvement. And it's a very unique niche market, I think, and that's why the company has done extremely well. Now, if you look at the earnings report and the reaction, it's actually justifiably so, and I'll explain. One, the company has been around as a private company for quite some time, and about 3 years ago, SAP, which is a German software conglomerate, bought them, but they actually now brought Qualtrics public in January. Now, the timing was maybe good but bad, so January was good, but we know that February was not. So the stock price is actually trenched to the downside. So it's not a new company. It's not a reverse merger through a SPAC. It's been around for quite some time. It does have about 13,000 businesses in its portfolio, and that's grown from about 9,000 businesses back in 2018. So it's grown considerably in terms of its exposure. But at the end of the day, if you looked at the company's profitability metrics, it's pretty impressive. So trailing 12-month revenue is about $239 million, and that's 36% year over year in terms of revenue growth. But if you actually look at its growth numbers going back to 2018, on a total annual basis, they were at about a $400 million clip. 2019, $600 million, and then 2020 at $900 million. So you can see what I'm saying here is that 4 to 6 to 9 is basically a 50% top line sales growth and exposure growth for a company that's basically in this niche experience management software industry group, and now, based on the report today, is profitable on an adjusted basis. They came in about 1 cent profit versus the expectations of a loss of, I think, about 3 cents. So they beat the estimates by 4 cents. So you have profitability, you have annualized 50% revenue growth, and you've got a company now that's sort of beating the trend against, or going against the grains of some of these data analytics and technology companies that have fallen traditionally or recently out of favor relative to where they've been in 2020.
It basically fell out of favor the moment that it started trading after a couple weeks of, we got about 1 week of gains in the stock, and then it's been getting bruised up since.
Yeah.
Dropped as, 34% from the launch price. So today, obviously, we're making some of that back, and the earnings providing some hope in this company. George, next one you got for us, let's go to Teradata. Once again, we're talking data, but this is more cloud database management. So this is a little bit more kind of a traditional cloud stock that we've been following, but still has had some crazy volatility.
Yeah, so Teradata Corp, it's actually been a public company since 2007. So I'm pointing these things out so that we can realize that these companies have been around for quite some time.
Right.
But it's basically a data analytics firm. It provides data and services that captures, integrates, stores, and does basically decision analytics, statistics, as well as business intelligence. Again, business intelligence has been a theme since 2020. And I think it's going to be a theme going forward. There's also an element of AI and machine learning built into this. It's not quite the same degree of a company like maybe Palantir, for instance. But again, it's a company that does, of course, rely on traditional enterprise business spending for data management. Now, the catalyst today is pretty unique in and of itself. If you look at the news, they actually increased their Q1 preliminary EPS estimates. And with that said, the stock jumped quite a bit today based on those results. And if you look at the analysts who are backing the revised guidance, Stifel, for instance, raised their price target a lot, from 26 to 45. Going back just a little bit, RBC actually raised their price target as well from 27 to 45. So you're seeing basically like a 70 to 80% jump in price targets based upon the preliminary results that Teradata has provided for their upcoming earnings, which is, I believe, on May 7th. So it is a legacy company, but one of the things about it is it was on the fringe. And what I mean by this is, if you look at last quarter's sales growth, it was actually down about 0.6%, but profit growth was about 1%. So its top line sales and profitability were on a knife edge. They were sort of on the fringe of between -1% and +1%. And so what's happened here is, because of this guidance revision, you see a magnified impact, because it looks like to me they're going to come in well ahead of the anticipated earnings expectations beforehand. That's why you're seeing the price increase quite a bit. And I know I'm running on here, OJ, but the primary catalyst for Teradata, which competes with the likes of behemoths like Microsoft and Oracle and IBM and SAP, is the conversion. This company has made a 3-year plan, seems to be executing on that to make the on-premise to cloud-based conversion of their services, and I think it's starting to manifest into some good profitability expectations. And I think they see this. I actually know they see this because that's why they revised their EPS guidance for the upcoming quarter.
Okay. George, always like the details, of course, very thorough, not leaving anything out. And some pretty interesting fundamental developments for both these companies at a time where the stock is needed a bounce, both for Qualtrics and for Teradata, now pushing back towards those recent highs. So both on the back of some fundamental numbers here. Like it, George. Thanks for the update on the overlooked stocks, as always.
Sure, you bet.
George Tsilis joining us from Salt.